Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar slipped back to the levels last seen in early February and posted an intraday low of 70.58. This is now seen as the crucial level of 70.60. I mentioned earlier that a break beneath there would give further exposure to the downside and look towards a region of 69.40.60, but the break, as of yet, has not emerged, and therefore we're still holding in a range of 70.60 to 71.45.55. As widely expected, the Australian official cash rate remains at 1.5% for a record-breaking 31 months. The Australian Reserve Bank has revealed yesterday that the record low of interest rates is continuing to support the Australian economy, while gradual progress is reducing unemployment and having inflation return to target, Governor Lowy said in a statement yesterday. From a technical point, I still feel there is further pressure to the downside, and also that we have seen a rejection, and like back in February early, the market did respect this level. We still should see further pressure. Resistance, as I mentioned, is around 71, figure 45 to 55. Overnight, the euro also slipped further and now looks towards the 112.50 support. The euro plummeted to a fresh two-week low of 112.89 as the greenback strengthened. The dollar index rose by 38% and peaked at a high of 96.33 and now closing in on the 97.40 target. It currently sits at 96.75 this morning. So on the flip side, this has strengthened the euro, and from a technical point, nearly got the marriage together from the RSI and the MACD, and could support not to 112.50, but down towards 111.60 as a target. From this recent negative signals, outside range day supports this view. Well, dollar yen is still coasting to a consolidating pattern, and this present is still lacking momentum above 112, which is near a 5-month high. It is assessed that we should see weakness from this level and see a challenge of 111.60, which was the break level. A move under there would give further scope back to 110.80 to 110.20.25. And as I mentioned, resistance seen at 112.40 to 45. It was interesting overnight that Mark Carney hit the news wires and said that UK is better prepared for a no-deal Brexit. Although he did tell the House of Lords yesterday that an abrupt exit could still deliver a big shock. If the UK leaves the bloc at the end of the month with no deal in place, it's more likely to be disorderly than a disruptive event, he said. From a technical point, though, we did break 131.50. This has exposed the region of 129.40. However, do keep your stops tight because of this pattern here of a slightly stronger terms of a doji, but the technicals are breaking down. But a move above 131.95 may negate the bearish call that I'm holding at present. Gold slipped further overnight, but respected the level 1,282. But the rebound is not quite out of the woods yet and could still see the bears return, and if so, see one more challenge. But we are oversold, and therefore, if we can get a break above 90, this could give further scope up towards 96 to 1,300. Oil sideways, and at the moment still looks towards the region of $58 a barrel. As long as we maintain above 54.95, then my view is bullish. Do keep your stops close though, because under there use little support to around $51. So market most probably would plunge through 54.95 if that's taken out. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the new day that's ahead.